Greetings everyone. I hope you all had a great weekend and looking forward to the upcoming trading week. So briefly, I'm gonna do a short market analysis for the upcoming week with particular interest to dollar index, USDJPY and EURUSD. So to start with, we're going to look on dollar index, which is what we primarily do. So now you can see already I'm on a line chart because I need to highlight my levels that I'll be looking at, and the line chart offers me great insight on the levels that I should look at. Firstly, we can see we're on a monthly chart, and you can see price is bullish. Price is moving to the upside, but in that bullish move to the upside, we had this low created. Okay, let me just mark this low here. So it's coming in at 96093. So we've got a 96093 low, and then we've got a high that was formed here. The reason why I'm marking this high because it was breached. You can see it was breached here. This high was breached, but prior to price dropping to form this low, we had these two intermediate lower high, and then we had another intermediate short-term low which was breached here. Then this high was also breached here. Now looking at it from this perspective, I've highlighted the most important levels that will be of interest in the coming week. Yes, of course, we've got this low here, see, short-term low that was formed prior to this swing high, and we also have this low here. But for now, the ones that will be of interest in the coming week is the ones that I've highlighted. Now I'm going to drop down to a weekly chart. Now take note, my black dotted lines represent my monthly highs and lows on a line chart. Now I'm on a weekly chart. I'm going to mark out the peaks and the lows on a weekly chart, and I'm going to make them a solid black line. I'm going to make it a solid black line, so that high is coming in at 740, 107.40 price point, and then we've got a short-term low that was formed here. Price is bullish, forming lower low, high high, lower low, then it's moving to the upside. So now we also have to highlight this one. Sorry about that. And also we have to highlight this high here. So now that we've done that, I'm gonna drop down to a daily chart. You can see, guys, what I'm really doing here, I'm just marking out the levels that I'm gonna be taking note of. So the dotted line, the dashed line, represent my monthly levels. The black solid line represents my weekly levels. Now I'm gonna highlight the daily levels. Right, we've got this level here. This is very interesting level here. You can see every time that I mark a zone, I make sure the line extends to the end, it's a ray, and same price point, so that it's not a trend line. Then I've got this low here, and then we've got this high here from last week, and then we have got this high also, right? So now that I've marked those levels, you can see the weekly level that I marked. Look how interesting it is on a daily. You see, price dipped down and rejected. That's on a daily. And we also have this guy here. This one is very interesting, you see, because we could have a breaker there. So once I've highlighted that, then I think this one I can get rid of because it's all in the same price point. Now once I've done that, I'm gonna switch back now to my monthly chart. Now we are focusing on the dashed line, but this time now I'm gonna switch back to a candlestick. You can see what that does, right? Focus on the dashed lines, right? The black dashed lines. Oh, sorry. On H4, our H4 line should be, we should change the color on the H4 so that it's different from, no, sorry, on the daily, so that it's different from the weekly. So we did highlight this peak, so I'm just gonna change that and make it a red line, right? Then we've got this one here. Let me delete this one, and I've got this one here. I'm gonna delete this one. I've got this one, then I'm gonna delete this one. Oh, sorry. So I need to change this one to a red line so that it's different from the weekly level. Then I need to copy this one, mark out this high here, then mark out this high here, and also mark out this high. What this does, the moment we switch to our candlestick chart, it will be easier for us to identify institutional order flow. It will be easy for us to identify the bearish and the bullish order flow in the market. So now I'm going to go back to a monthly, then I'm going to switch to a candlestick. You can see the dashed black lines. You see those peaks, the 3 peaks, 4 peaks that we marked. So we've got a bullish, a bearish order block here, which was respected, price dropped to the downside. Then we've got a bullish order block here, price respected it, went to the upside. Last down candle, this is a bullish order block which we would expect to trade to the upside when price comes down. We've got this bearish order block inside here, price respected, went to the downside. Look what's interesting up here. See this bullish order block, it was breached here and price traded to the upside, right? So we are mainly going to be focusing on what's happening in this range. You see the range between this bearish order block and the market structure break to the upside. So now I'm going to go to a weekly time frame. Now on a weekly, remember my solid black lines represents the weekly levels. We've got an up candle here which was traded to and price rejected. We've got our bearish order block here. Where's another solid line? We've got this low here. It's interesting because of the swing structure of price action. Now I'm gonna go to a daily chart. Now on a daily, my red line represents my daily levels. Look at this area here where the price swing to the upside, taking out the stops above this high, and then market retrace to the downside. You see, and look at the area where that is happening. It's happening where there's a bearish order block. You see, on a weekly time frame. Remember the solid black line represents weekly levels. There's our bearish order block on a weekly time frame. Price traded to that level last week and had a rejection on Friday. There was probably liquidity engineering to the downside. Market takes out a high and close below, rallies to the downside. So now what we are looking at in the coming week, my forecast on dollar index in the coming week, I'm expecting further weakness coming into dollar, right? Further weakness, but it's not gonna be that much sustained, but we're gonna be looking at price to trade to this level here, the 96.79 level. I'm expecting price to hit that level in the coming week with a long-term bearish momentum targeting this bullish order block. You see this level here. Price should look to trade into that in the next coming week or two. If that's not the case, then we need to wait for market structure to break and close above this bearish order block. So now I'm gonna go on to a lower time frame, H4 to be precise. Now you can see we had this weekly bearish order block. Price accumulated here. There was accumulation, and then we had an expansion to the downside, right? Meaning this level managed to hold. Same applied here. Price came back into this bearish order block and it respected it. You see, we had a bearish engulf and price dipped to the downside, taking out this structure here. Yes, we've got the wick, but remember we focus on the candle, which is where the institutional sponsorship happens. So these candles already have been taken out. So I'm looking for market to trade all the way to 99.80. The 99.80 price point. I'm expecting market to dip down further into 99.80. You see? Or all the way to 99.50. 99.50, 99.49 price zone. If market does break above 100.73, then we need to wait for it to close above this structure. You see? But now you have to ask yourself, where's the liquidity? When you look at this structure here, where do you think the market is gonna go in terms of hunting for liquidity? We've got these levels here. You see? These two equal lows that are resting below a daily order block. Remember the red line. So expect market to clear up the liquidity down there, even extend to these lows here before we probably see another rally to the upside. So when it comes to dollar index in the coming week, I'll be looking for further weakness all the way to 99.80. You see, 99.80 or all the way to 99.50 price point. Let's look what that does look like on an hourly chart. So this is our structure on an hourly chart. You can see what I was saying, that there is liquidity down here. Market has already cleared this high with a short-term short liquidity engineering here. Market spike, close below, rally to the downside. Remember, this is our weekly bearish order block. This is our weekly bearish order block price area, this area here. So expecting price to face some resistance when it comes back into that range. But of course, right now it has already dropped down. So expecting further weakness coming down to 99.80 or all the way to 99.50 price area. So look for market to retrace a bit to this area here, probably to this last up candle. Let me zoom in. Look for market structure to trade probably to this bullish bearish order block on a hourly price point. If it does retrace, then this area we need to be hunting for shorts to the downside, expecting weakness to the downside. See, so this area is gonna offer better chances for market to go to the downside on dollar index. If that level does not hold, then expect the 173, 175 price zone to offer a chance to take the market to the downside. So dollar index, I'm looking at bearish order flow in the coming week. I'm expecting further weakness on the dollar in the coming week. So now what does that outlook mean for, say, USDJPY or EURUSD? Right. Another one statistic to take note of on the dollar index. From the COT report data, we have seen that on the non-commercial side, there've been an increase in longs from 23,800 to 24,800. So we have had an increase of about 1,000 positions to the upside on the non-commercial COT report, and then the short positions that they are holding, they have also increased from 8.5 to 9.2. You see, and overall the positions that they are holding from last week up until the 21st, yes, the 21st of April, their positions have increased by about 2,000 positions. But now looking at the commercial side, the hedging side, which is like the most important, guys, that we need to look at, because they counter whatever the non-commercials are doing. The hedging side on the COT data for dollar index, we have had the commercials increase their long exposure by short numbers, less than 15 positions that they have done increased. But if you look at the short positions that they've added from previous week, they've added roughly about 1.5 short position, meaning they are holding more to the downside on dollar index. So they are hedging further positions as compared to non-commercials, which increases the possibility that we're gonna see further weakness coming in the dollar index. Yes, the COT report for some is still alien, but that's something that I normally do every Saturday after 10 p.m. when the report is released. It helps me in analyzing what the data is telling me. So you can clearly see that from last week, short positions were added higher than long positions. That's why we saw a drop, and that drop happened when we were approaching a institutional level where we had bearish order blocks. So it really supported that notion. So now looking at the yen has got a very interesting structure. We've got price trading inside a range. You see this daily candle, price is trading in this daily candles range. But now looking at the focus that I have on the dollar index, I'll be expecting yen to trade to this key level here. We've got this key level here on the yen. Okay, let me switch to my line chart and mark. You see, we've got these two equal lows on the line chart, but now I'm going to switch back to a candlestick. I'm on a daily chart, so I'm expecting market to trade to this key level here on the USDJPY once it breaks out of this one day candles range. You see, the whole of last week market has ranged in this candles range. So a break and close below, then expect market to go all the way to 107.155, since I'm expecting further weakness coming in dollar index. So that means the USDJPY is gonna move to the downside, and this is also supported by the COT report. We have had the commercials. The commercials, they've increased their short exposure on the yen from 75,000 up to 78,000. So there's been an increase of 33,000. And then while the non-commercials, they have increased their long exposure by also a couple of thousands, from 49 to 53, which is almost like 4,000 long exposure. But as you can see, the commercials, the hedging side of the market, the COT report data is telling us that they've increased their short positions quite massively, and they've also increased their long positions by almost another 3,000, while the non-commercials, they haven't increased any shorts. So market is really telling us that it's gonna push to the downside also in the coming week. So I'm expecting these numbers to increase when the next report comes out next Saturday. So now looking at USDJPY, expecting further bearish move to the downside on the yen, expecting market to trade to the downside, but it has to clear up the liquidity down here. Let's see what that looks like on an hourly chart. So this is our hourly chart. You can see already market is retracing up to this range here. See these two candles, combine them, you get a bearish order block. So expect market to reach for that level, clear up this high or this high, and then drop to the downside. So you must take note of the opening price of USDJPY, because this is the first asset that opens. Now looking at EURUSD, we are on a daily chart. You can clearly see on a daily chart we have had this level here. Market traded below and then couldn't close, hold price, and then push to the upside. So this is a possible stop hunt to the downside. Market cleared up this low and this low, so this is a possible stop hunt to the downside, spike through a demand and then close above. So with the focus of dollar index expecting further bearish, I'll be expecting further bullish when it comes to fiber, but further bullish moves to which level? To this bearish order block here. So I'll be expecting price to trade all the way to 1.0878 in the coming week. That's an easy 50 pips. So with the weakness coming into, with my focus is weakness coming into dollar index, these are the levels that we should look at when it comes to USD, EURUSD. So this is the range that we are looking at. So now if I go to my H4 chart, you can clearly see 1.079. If market does retrace to the downside, then expect price to find support. If it does retrace to the downside, expect price to find support and trade to the upside, targeting these levels here. You see, with a long term target of 1.0980, which is this price zone here. Now looking at the COT data, what it's telling us is that the non-commercials, they've increased their long exposure from 165,000 all the way to 170, so that's a 5,000 position increase, and they've also increased their short exposure from 78 to 83,000, so that's like another 5,000 increase on their short exposure. So they basically matched their long and short exposure. And then looking at the commercials, they decreased their short positions. You see, they decreased their short positions from 470,000 to 418,000. That's like 4,000 decrease, meaning they have took profit on their shorts. And then they've increased their long exposure from 296,000 to 297,000, meaning they are adding more positions to the upside. So expect a bit of a retracement on EURUSD to probably 1.079 before market can push to the upside, or it can open and push to the upside all the way to 1.0876. So that's my focus, guys, for the upcoming week. So I'll be expecting further bearish moves on the dollar yen, on the dollar index, and then on the dollar yen also I'll be expecting bearish moves to the downside all the way to 107.155, and then I'm expecting Euro USD to push to the upside. Since we are expecting weakness in dollar index, so I expect Euro USD to push all the way, clearing up these highs here, clearing up these highs all the way to 1.0875. So take note, when dollar index retraces to 100.50, that level is going to offer us a chance of getting easy pips on USDJPY and EURUSD to the upside, to the downside and upside respectively. So take note. And when dollar index hits 100.115, expect a bit of support before market crashes to the downside. So we need to take note of the momentum that it approaches the 100.115 level. So yeah, that's pretty much about it, guys. I hope that's well understood, and I wish you good luck and happy trading in the coming week. Cheers.